Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 20th of June, and we have Charu Chanana, market strategist from Saxo Capital Markets, from Saxo Markets Singapore, as our guest today. Welcome to the show, Charu.
Hi, good afternoon, Brian. After some tech difficulties, it's good to be back on.
Yes, it is. Now, Charu, before we come back to you and get your insights, we're going to take a look and see how the numbers stack up across the region in the first half of the day. We'll start with crypto markets. Bitcoin is at 26,951. It's up 1.98%. Ethereum is at 1,730. It's up 0.38%. Looking across to regional stock markets, we start close to home to you, Charu. The SGX is down 0.46%. Bursa Malaysia on the KLCI is down 0.01%. Shanghai is down 0.17%. The ASX All Ordinaries bucks the trend. It's up 0.9%. The Nikkei is down 0.21%. The Hang Seng is down 1.3%. Rounding up the numbers, we have the Kospi, which is down 0.18%. Charu, what's your view on the market performance in the first half of the day?
So, Brian, seems like an overall, it's been a downbeat start to the day in Asia, and that's particularly because of the disappointment that's coming through from those China rate cut announcements. Investors have been waiting for stimulus announcements from China for quite some time. Over the weekend, there were expectations that there will be some announcements, but just the whole pace of easing in China, and now today we had the announcements on loan prime rate cuts. They were cut by 10 basis points, both for the 1 year, but also the 5 year loan prime rate, which is basically used for mortgages. So it was an indication as to how much stimulus they want to give to the property sector, and a 10 basis points cut has been underwhelming. There were some calls from some of the economists for about like 15 basis points of rate cuts as well. So just the whole delay in that stimulus announcement, and also the quantity of the stimulus that we're getting as of now from China has been underwhelming.
Now, this is a sentiment that's echoed across the world, isn't it? Because basically, top tier investment banks, including Goldman Sachs and JP Morgan, have recently also cut their full year GDP estimates for China. And of course, have warned of further headwinds ahead. So, given this general pessimism around China,
Hmm.
how are investors at Saxo reacting to that?
So, I mean, for Saxo, we've been quite clear since the start of the year that China could potentially see a cyclical rebound because of the reopening, but structurally we have been bearish on China because of the whole transition that we are seeing towards slower growth in that economy. And the surprise factor here has really been that the structural rebound has also underwhelmed, and the structural forces continue to be more powerful than those cyclical factors. And investors continue to be extremely cautious, despite those reopening tailwinds. The geopolitical situation has been on shaky grounds, and also the regulation risk in China is something that investors are not able to discount at this point in time. But I do think that right now, there's a lot of risk that's factored in the Chinese market. So the valuation does suggest that there could be again some room for a tactical rebound here, and I think it's obviously a good time for traders. But if you're an investor, then I think there's still a lot of cautiousness to take exposure again in the Chinese markets after the whole COVID-19 period and how they handled the pandemic and the whole realignment of supply chains that we are seeing in the global economy right now.
Now, speaking of that, Charu, for all the reasons that you've just mentioned, investors have pulled money, foreign investors have pulled money out of China. But one of the markets that's a key beneficiary is Japan, which has
Absolutely.
enjoyed a stellar rise in markets this year. And this is backed up again. This was primarily started also by Warren Buffett increasing his weightage on the China on Japan and the Japanese trading houses, in particular the Sogo Soshas, but he's added further holding to those Sogo Soshas, hasn't he?
Yeah, yeah, absolutely. So Japan markets have been up 28% so far this year. And, there's been a range of positive news. There's been corporate reform in Japan. Valuations are cheap. The Japanese companies are now being very conscious about shareholder returns. And like you said, geopolitical tensions have kind of also worked in favor of Japan. So a lot of chip companies, etc., who want to move out production from China because of those US China tensions are looking at Japan favorably as well. And to top it all, we had Warren Buffett, who was in Japan in April, and he announced an increased stake in his five trading houses. And yesterday, again, we heard from Berkshire Hathaway that they're increasing those stakes further. Now, a common question that I hear on Japan equities from clients here, as well as people I talk with, is, are these overbought already, and is there still room to run higher? Well, my sense is that we're still coming from a very low base. Even if you just look at Warren Buffett, he's also still saying that his average stake in those five companies right now is about 8.5%, and he might take it to 9.9% or so. So even he sees potential for further gains. And I do think that this whole AI rally that we've seen in the US markets, particularly over the last several months, will also have tailwinds for Japan, because we know about it. Japan has been a leader in robotics, in tech, and now with this growing chip industry as well, I think Japan is positioned to capitalize on this AI growth trend as well.
Now, on a different note, let's move on to India, where the Airbus has won the biggest order ever, over 500 aircraft from an Indian carrier.
Yeah, absolutely. So India is actually one of the second markets which is also seeing positive impacts from those geopolitical tensions, with companies trying to move out their supply chains, or at least spread out their supply chains to friend shore or near shore, or just be in more accessible locations. India has obviously been able to provide the kind of scale and the kind of labor that those companies need, so it has been viewed favorably. But certainly, I think one of the key factors why a lot of investors are looking favorably at India is also the massive consumption demand. And the kind of push we're seeing on manufacturing, on digitization, just means that we can see a big improvement in per capita incomes as the demographic dividend also plays out in India. So I think all those factors are just aligning so well for India right now, that I do think that portfolio managers are going to look at having a dedicated mandate for India, instead of just clubbing their investments in India into an emerging market basket, particularly.
And Charu, that's an interesting observation that we should be looking out for going forward. Charu, thanks for your insights. Thanks for coming on the show.
Thank you, Brian. It was a pleasure.
I'm Brian Fernandez, and we've been speaking to Charu Chanana, market strategist from Saxo Markets, Singapore, on BizTech's Asian Midday Market Watch. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.